the retail sector will see a growing gap between winners and losers across low end and luxury. Joining us now, BMO capital markets analyst Simeon Siegel. Simeon, thank you for being here. So help us break down where you see the winners and losers in those two segments.
Hey, Leslie, so listen, the best part of this is that I don't even have to be the one to say there's going to be a divergence. We're seeing it. I don't have to be the one to say where consumers are spending. We're seeing it. And so I think that's what's important. I think what we are seeing is businesses like TJX, which are compounding, and they're gaining share. But then there's also some businesses on the other side, and that's true across the spectrum. And I think that's what's important. I think it's very easy for us to say high versus low income. People are shopping if they have money, and they're not if they're not. But it's very rightly or wrongly, people are scared to not have something under the tree. And I think we're going to find out that people spent across the gamut at holiday, and we're going to find there are companies that took advantage and companies that were left behind.
What do you think in this environment is the best way to take advantage of the current environment? Is it discounting, offloading inventories, repricing certain products? What do you think is the appropriate strategy that will ultimately become successful next year?
So I think it's a great question. I think there's also important to make to effectively distinguish between companies and stocks. And so from a company perspective, if you have excess product that's not moving, you need to take your losses and move on, and you need to take that reactionary discount, because there's a difference between deciding to proactively discount as part of your strategy and to clear. But you need to do it, and then you move on, you have new product. I think what's interesting now from a stock perspective, I think there's companies that you can say that are quality compounders that are not cheap. They're expensive for a reason. And again, I mentioned TJX. But I also think what's interesting now, because of that pervasive fear, because of the view that the consumer is feeling a lot more pressure, there are actually some companies that, from a stock perspective, that I think are very underappreciated. I think if you look at a company like an Under Armour, which is in turnaround mode, which actually is maybe doing the reverse of that promotional comment, is saying we're going to pull back. We're going to actually sell less, but charge more for it, which sounds like inflation. You're actually seeing the earnings growth. And when when stocks are underappreciated, earnings growth can be really powerful. And so I would say that's my barbell as I look into the next year. I've got my expensive for region TJX, which should be a quality compounder, but then the company with some maybe underappreciated torque in the form of an Under Armour.
And Simeon, I think just from a macro perspective, you said it, when you have wage growth, when consumer debt balances seem like they're relatively manageable, people are going to spend to their ability to do so. But what about the goods versus services breakdown, whether you see any shifts in that dynamic or anything else that might, be relevant in terms of where consumers emphasize their spending dollar?
So, hey, Mike, it actually is right behind you, which is fascinating because I didn't even realize that. But it's December 31st, and it's Planet Fitness's day to shine. And so you've got it right on the screen behind you there, where here's a service where they have seen, so this is a gym, this is a brick and mortar gym that is probably the TJX of gyms that has just been compounding its business. And they're watching people not only spend the $10 a month, now they've raised price to $15. And so I think that this is probably true goods versus services, maybe in a different way than saying discretionary versus staple. So need versus want, spend is a different conversation. But goods and services, I actually think maybe we get a little bit too broad brushstrokey on this as well, saying, okay, people are just going for experiences or people are just spending on the service as opposed to these goods under the tree. And I think, again, ironically, that Planet Fitness, which is going to have their big New Year's countdown soon, and January really matters for them, we'll watch how New Year's resolutions work, I think shows a nice indication of here you have, again, maybe a more entry-level priced gym that's been flourishing. So I think it's an interesting question. It's an interesting point. I think I'd probably make more of a distinction in an inflationary environment and a macro environment between things that people want to spend versus things that people need to spend on, as opposed to are you buying this goods or services, which becomes a really interesting conversation. But I think you give me a compelling service or you give me a compelling good, and you're actually seeing me open my wallet for it these days.